Let's kick it off here with Nike, talking about superlatives.
Shares are edging lower by 13%. That's the lowest since November 2017. Oof. So really, we have European sneakers, clothing, and just jewelry plunging Nike amid a shock to supply chains. I mean, Nike, for instance, they've increased their reliance in factories in Vietnam and Indonesia. That's after President Trump targeted China with tariffs during his first term as president. And now Nike produces 50% of its goods in Vietnam. And well, now the U.S. is imposing 46% reciprocal tariffs on Vietnam and 32% on Indonesia. And these companies may really just struggle to find a better place for production. I mean, they could either absorb the cost themselves or pass them on to consumers. And I'll throw in one stock there, Lululemon. They produce 40% of their stock in Vietnam. They're also down around 13%.
Yeah, and also I should just point out too that the tape is getting a lot worse after those ISM services data here. Yep. You have the S&P now at, or S&P futures, I should say, at 54.81, just breaking below that key March support level. So you're going to see some more speed to the downside. What else are you looking at, Isabel?
Apple, again, another superlative. Shares are falling by 9%. They're erasing around $300 billion in market value. So their supply chain, as we all know, is also leaning heavily towards China. Shares are slumping. And even after they've really had this years-long effort to insulate themselves from the trade war and the supply chain disruptions, it didn't really work out because they produce other things. Their other manufacturing centers are in Asia. For instance, India is where they build iPhones and AirPods. Vietnam is where they make AirPods, iPads, Apple Watches. Malaysia is where they make Mac computers, and the list goes on. And today, Apple conducts really little to no mass production in the U.S., so they're also one of the biggest hit in this tariff war.
What's so interesting to me is that we kind of knew things were coming, and yet still the dramatic slide in some of these stocks is quite staggering.
I've never seen my inbox look so pessimistic. I haven't seen one note. Maybe I haven't clicked on them, but really everything is just really gloomy.
And let's round it out here with GM.
So GM, shares are edging lower by 3%. They were fluctuating between gains and losses, but even Ford. But I think in general, President Trump's 25% tariff on imported cars are really affecting the automakers. In fact, we have Stellantis, which is a Jeep maker. This is the first sign that there's a concrete step made toward this because they temporarily halted their production in Canada and Mexico. And for instance, Ford also began offering steep discounts. So just this whole sector is really just, I would say, jittery. The levies are really just part of a broader trade war. And I feel like autos, it's a big ticket items. Like, I mean, cars cost a lot. This will really increase the cost of all those by double-digit thousands.
Yeah. All right, Isabel, thanks a lot. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere where you get your podcast.